Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into a report from Polomar Health Services, and trust me, this one's a bit of a roller coaster. It involves some interesting agreements and potential risks, so buckle up. We are going to talk about medications you inhale and the potential for a lot of money to be made or lost. Polomar Health Services has entered into an agreement that could be a game changer for them. They've teamed up with For Humanity Health and Island 40 Group, or IG4, to market some of their medications. It's basically a deal where Polomar provides the drugs, For Humanity tries to sell them, and IG4 helps manage the whole thing. The deal was originally signed around the middle of March in 2025. Now, what exactly are they selling? Well, Polomar has licensed the rights to make inhalable Saldinicin, and For Humanity gets the exclusive right to market them. Sildenafil is the same drug as Viagra, often used to treat erectile dysfunction, and sumatriptan is a drug to treat migraine headaches. The important part is that you are breathing in the medication, not taking it as a pill. Polomar is handling the actual dispensing of these medications through their own pharmacy. This means that when a patient gets a prescription, Polomar fills it. The agreement is set for 3 years and could continue automatically if For Humanity meets certain sales targets. So if they sell enough, the partnership keeps going. If not, the deal might end. Here's where it gets interesting. Polomar received a guaranteed payment of $750,000 in exchange for giving For Humanity exclusive rights to market the drugs until late September of 2025. But if For Humanity brings in at least $1.5 million if For Humanity brings in at least $1.5 million in sales for Polomar by March of the following year, that exclusivity gets extended. The agreement even talks about additional extensions if For Humanity to actually sell those medications. If you want to see all the details, you can look at the exhibits attached to the report. It contains the full text of the agreements, but some confidential terms are redacted, meaning they are hidden from public view. Now, let's move on to something called forward-looking statements. This is where the company talks about potential risks that could affect the business. In this case, they are basically saying, hey, here is what we hope will happen, but it might not. Companies will often say this to avoid getting into trouble with investors if things do not go according to plan. First, there's a risk that the patents for these inhalable drugs might not actually be approved. If they don't get the patents, it could hurt their business, because other companies might try to sell them too. Next, there's the risk of For Humanity not being able to sell the medications effectively. If For Humanity can't market the drugs well, Polomar won't make as much money. Finally, it may be difficult to combine For Humanity's telehealth services, meaning seeing a doctor over the phone, into Polomar's current business if they can't work together well. The deal might not be as successful. The company also references additional risks outlined in their annual report and other filings, so it is best practice to read those to get a full picture. They also caution investors not to rely too much on these forward-looking statements because reality can be very different from expectations. The report contains a list of exhibits which are additional documents that provide more detail. Tai, let's step back and analyze what's happening here. Polomar Health Services is betting big on this deal with For Humanity. The guaranteed payment of $750,000 gives them some immediate cash, but the real potential lies in the future revenue from sales. The success of this venture hinges on a few key factors. First, can For Humanity effectively market these inhalable medications? Second, will the telehealth integration work smoothly? And third, what happens if those patents don't come through? From an investor's perspective, there are reasons to be cautiously optimistic and cautious in general. If the drugs take off, Polomar could see a significant boost in revenue. However, the risks are real, and investors need to weigh the potential rewards against the possibility of setbacks. The guaranteed payment is also a great thing, but it only covers expenses. The main goal is to make profit and not just revenue. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, subscribe, and hit that notification bell for more insightful analysis of corporate filings. Let us know in the comments what companies you'd like us to decode next.